Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on the key stocks and sectors that one should be focusing on. Now, after a 500-point fall in the past week, Monday's session saw some kind of consolidation, and we saw the index taking support at 50 DMA around 19600, 19630, and it rebounded up to 19700 zone. But if we still observe the trading pattern of the index, there's a lot of volatility as well as selling pressure is visible from higher levels, with stocks such as Reliance, HDFC Bank still not showing any signs of a proper rebound. Now, after four consecutive negative close for Bank Nifty, yesterday's session saw the index witnessing some respite and buying support from lower levels was visible, leading to the index closing 0.35% positive. But here too, like Nifty, again, Bank Nifty was facing resistance around 44,950, 45,000 zone. And again, it gave up a lot of intraday gains that it had registered in the first half, like Friday. And the reason for this is the non-performance of HDFC Bank. Now, on the global front, we are seeing strong data points coming out from the US, which is leading to the dollar index sustaining at higher levels above 105.50, and add to that the crude prices sustaining at higher levels of $94 a barrel. This is the main reason of the index witnessing selling pressure at higher levels. Now, sector wise, if we see where the momentum was, we saw decent momentum built up in the cement names yesterday. Ramco Cement, Dalmia Bharat, Grasim all saw some kind of short covering moves after a dip in the last few sessions. Now, even Bajaj Twins, Bajaj Finance, and FinServ saw some decent momentum build up yesterday, and we expect this to continue for the next couple of sessions also. CPSE stocks such as NTPC, Coal India, and PSU bank stocks such as Bank of Baroda, PNB, Indian Bank witnessed a continuation of their outperformance that they have been witnessing over the past few weeks. And remember, we have been discussing this. We have discussed this several times in the past 4 or 5 days. Also, good action was visible yesterday in the sugar names such as Triveni, Balrampur, Chini, and a lot of other names. Now, coming to Nifty levels, key level for Nifty is the 20-day exponential moving average, which is placed at 19,760, 19,770 zone, and which is acting as a hurdle. And since Friday, index has been sustaining below this level, and post that all rises are being met with selling pressure from higher levels. So we feel that this is the most crucial level, 19,770 on the upside. Above 19,770, a short covering move can be witnessed up to 19,850, 19,880 on the upside. Now, with expiry approaching and highest put writing visible in 19,600 puts, key support zone now lies at 19,570, 19,600 zone, which is also the 50-day moving average. Highest call writing is visible in 19,700, 19,800 strikes, implying the resistance, the first resistance at 19,770, which we just mentioned, and followed by 19,850 on the upside. We feel that the trading range for the next 1-2 sessions could be 19,550 on the downside and 19,760, 780 on the upside. Now, coming to Bank Nifty, key support level now for Bank Nifty lies at 44,350, 44,400, which is also the yesterday's low, and also the highest put writing is visible in 44,500 strike prices. So this makes 44,350, 44,400 all the more important support zone. Key hurdle now lies at 44,950, 45,050, where the 20-day exponential moving average is placed. And remember, last 2 days indices have been after a rally, indices have been meeting with selling pressure at this zone of 44,950, 45,050 zone. So now we feel going forward, the index could trade in a range between 44,350 on the downside and 45,100 on the upside. Above 45,100, we could see the short covering move up to 45,400, 45,500. Now, coming to open interest data, highest open interest is placed in 44,500 puts and 45,000 calls, which makes the trading range somewhat look like 44,300, 44,350 on the downside and 45,100 on the upside. Now, the trend in HDFC Bank as well as ICICI Bank would be very crucial and could act as a key for the Bank Nifty move from here on. Now, if we observe the FII data, FIIs have been net sellers in the cash segment to the tune of 2,333 crores, while DIIs have supported the markets as they have bought to the tune of 1,500 79 crores. Long short ratio for FIIs in index futures has dipped to 49%. Now, this is the lowest in the series, and which is a negative. FIIs have sold index futures to the tune of 15,634 contracts. They've bought stock futures to closer to 26,640 contracts. On the options front, FIIs have bought 45,700 odd index call options, and they've sold 16,292 contracts of index puts. Now, going into the expiry week, looking at the overall FII's data in the derivative segment yesterday, it is kind of positive because they have apart from selling futures, they've bought stock futures. Uh, they have bought index call options, then they have sold index put options. So it's just that the index futures that they have sold is a negative, but rest they are all in a buying mode, just for a day at least. So it is kind of positive, although from a 1 day's perspective. And after several days of negative data, seems that they're just trying to hedge their index short future positions by buying some calls. So what we feel is that, and one more important point is that the last two sessions, if we see on Friday and Monday, both days the data is showing that they've started selling index put options, which is kind of a signal that they are expecting the volatility to kind of reduce from here on, at least going into the expiry week. So just to summarize, we expect the indices to witness buying support on dips around 19,570, 19,600, and resistance could be witnessed around 19,770, 19,780 zone on the upside. For the bank nifty, key support would be 44,350, 44,400 zone, and the resistance would be witnessed around 45,000, 45,100 zone. And we still feel that large caps barring Reliance and HDFC Bank could still continue to witness some kind of outperformance or stability over mid caps and the small caps from here on. So friends, that's all for today. Thank you all for regularly listening to the podcast, and we hope you are really finding it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.